Hi, welcome to this video today, which is our updated outlook for the US dollar against Japanese yen. It is the 19th of February. We're going to look at the key technical levels to look out for. We're also going to look at the big fundamentals driving the charts. And we're also going to look at the Japanese yen on a number of other pairs as well. But first of all, let's have a look at USD JPY. Now, in terms of the chart, we had a strong move up in the dollar. But in recent months, we've got a sideways channel. We view this as distribution, and the US dollar is going to break heavily to the downside. We'll go through the fundamentals in a moment, but in terms of the chart levels to look out for, at the moment we think the 20-day moving average just bounced off that level at 118.40 is the level to look out for. If we break through that level, we expect to move to key support at 116. That is the bottom of the channel. That gives way, a major trend change will be confirmed in the pair, and we'd expect the dollar to decline to 110. Now, we could rally to the upside, but I honestly think the rallies be capped up at that 120 level. Regular viewers of our weekly forecasts will have seen us sell above that 120 level a while back, buy it back into 118. So we're quite happy to sell the dollar on a rally up above 120 if it gets there. But we really think we're going to go through 118.40 first of all. Now, in terms of the trend change coming, why are we so bullish of the yen? Well, there's several fundamentals now coming into play, which are just out and out bullish for the yen. Now, in our weekly forex forecast, our last yen report, we said the Bank of Japan had no intention of doing any more monetary easing, but the market kept selling the yen on the fact that they would. The Bank of Japan have now come out and said they will not be doing any more in the near future. And it's right. It's the right thing to do. They could not do any more monetary easing. They risk spiking their own bond market. So that is a bearish fundamental removed. Also, Japan has just emerged from recession. It's another bearish fundamental out the way. And we had all the money is going to flow out of Japan from private investors and pension funds. The market sold the yen off on that. It never happened. Money has stayed at home. Japanese are very risk-averse investors, and they're going to keep their money at home. They're not going to be putting it abroad at the moment. But the fundamentals that I've just noted in the last few days that have made the yen even more bullish in my view, and I didn't see much about it on the news wires really, was the trade deficit year on year for January down a whopping 60%. That's a huge fall. We noted a while back that people were saying oil prices falling was bearish for Japan. That was not the case. Japan is a major oil importer. It's literally like a tax cut for the Japanese economy. You can see it in the trade deficit. That is a big, big decline. We've got exports up 17%, and we've got imports down 9%. That is pretty bullish. Now, what the Japanese have also done, which I think was really a good policy move, was the government has been persuading businesses to basically push on some of their profits into higher wages, put money in the pocket of the worker. You can have monetary easing, but you've got to get money into the consumer's pocket. And a lot of banks who've done this have not understood this. The Japanese do. And the Japanese workers got more money, consumers got more money. That should boost domestic demand. And Japan will avoid deflation in our view at the moment. So it's looking very bullish there. But the big bullish fundamental for Japan is safe haven flows. If you look at global stock markets, they're at multi-year highs. The Japanese yen has been a bit softer, but it's not melting away. And I think a lot of people are nervous. Okay, we are at multi-year highs in the stock markets, but I don't see that much enthusiasm amongst investors. Why? Because we know it's just created. It really is just pure speculation. It is a result of quantitative easing by a number of central banks that has pushed money into higher yielding assets like stocks. Now that will end. Now, Japanese yen is the number one safe haven currency, so it stands to really gain if stock markets correct. It also stands to gain on any other problems in the global economy, and at the moment we have plenty. We've got the Greek saga, where the Greeks are trying to basically make the bailout conditions better. You've got the EU opposing them. They may just put together a deal to push it forward, but I do not see any way that Greece can stay in Eurozone unless it has a write-off of some of its debt. And the market is very complacent about this. Greece leaving Eurozone will see the zone start to crumble. Other nations will be looking to get out. Protest votes will rise. Yeah, I was reading a survey on Reuters to do with economists. Only 25% see an exit of Greece by year end. Well, it's guaranteed by year end. The market is just too complacent. So you've got that Greek problem. You've also got problems in the Ukraine, supposed ceasefire, everyone's still fighting. We risk another confrontation between Russia and the West. Wherever you look in the global economy, there are problems, apart from in the US. The US economy is doing okay. China is not. That is slowing up, looking like it's going to have a hard landing. Eurozone, the Greek problem aside, is heading for recession and deflation. Emerging markets are in big trouble due to the oil price drop and also just generally falling commodity prices. So you don't really have any growth around, apart from the US, to justify stock markets at multi-year highs. And in terms of the US, they will be putting up interest rates. That is going to hurt stocks, hurt emerging currencies and commodity currencies. So I think, we've got a lot of problems that could hit home very shortly, and that is just bullish for the yen. And I think I noticed it in our weekly review, where I was reading a report from a bank. It was a Canadian bank, I can't remember which one actually, but they were convinced in their forecast that the US dollar will be trading at 132 by the end of the year. It'll probably be trading, down below 110, probably at 100, maybe even less, if we see the move from safe haven flows. No chance, in our view, of it going to 132. And they're not the only bank. Every bank and broker and investor, not every investor, but most investors, just bearish the yen. But you look at the charts, wait for confirmation, and you look at the fundamentals building in the background, you can see a huge move in the yen coming to the upside. It's not going to just be on the US dollar. It's going to be across the board. We've noted before that the commodity currencies, New Zealand dollar, Canadian dollar, Australian dollar are vulnerable. So are the emerging markets, because they're the ones that are going to get hit most, on a move from risk and a slowing global economy. We've already had some decent profits in those trading the short side. The recent rally is just a sell in our view. Just got to sell weakness. Now, there's other majors as well. I mean, the euro, it might get a small bounce if they put together some deal, with Greece to keep talking for longer or whatever. But, we've had a great run down in euro JPY. And this rally we've just seen, it's just short covering, correction of oversold. We view the euro as very vulnerable to a break to the downside, and the British pound as well. British pound overbought across the board. We think it's due to break significantly lower on the yen. But you can pick any major currency you like. The yen is for us a great buy on confirmation, and could be one of the best trends of the year. So thank you very much for watching me as per usual. Take care. Have a good day.